Johnny on the spot, as they say.
As always.
And welcome everybody again. So before we get into our gold conversation, I got to ask you, Rob, given the choice between a 1967 pre-Endura bumper GTO or a 69 Chevelle, what are you taking? Because I know you're a huge fan of the muscle cars.
Yeah, you are correct there. And now you've given me a pretty difficult choice there, but I got to go with the GTO.
I agree.
Yeah.
I agree that, they ruined it when they put those Endura bumpers on because, as you know, they didn't hold paint. But I'm completely digressing here. And maybe we'll talk about that in another webinar because I could do a series on that. But we'll also have to talk about what's going on in gold. And I got to tell you something. If you had told me everything, Rob, that's going to transpire over the last few months and then said, okay, where's the price of gold? I would have said we're significantly higher than that August of 2020 high, and maybe we're approaching $3,000 an ounce. But here we are floundering, around 1750, 1800. Does this make sense to you given what's happened over the last few months?
No, it actually makes no sense to me, which is one of the reasons I was excited about this, because I know you have some experience with the gold in your history, and I have no idea why. I mean, there's a number of things that we can go through and talk about, which should bring gold price higher, and it's not. So that's the subject of what's wrong with gold. I thought was pretty appropriate. And looking at the GLD, the ETF, man, it's sitting right on support. I know you look at the chart as well, and if it doesn't hold 160, then we're going significantly lower, which it's all mind-boggling to me. I don't understand it at all. So
no, it would appear that way. And the levels you talk about is actually, we've basically round turned over the course of a year, not really a year, probably closer to 10 and a half, 11 months. But gold broke out from effectively these levels in April of last year. We had up to the August all-time high, and then we've obviously been sort of meandering and slightly, or I shouldn't say slightly lower, precipitously lower ever since. And I will tell you, and I think you know this because you watch Fast Money, and this needs to be discussed because it's part of the story. I'm no fan of the Federal Reserve. I'm no fan of central bankers, and this is a conversation I'd love to have. But, I think everything they've done, although probably well-intentioned, certainly well-intentioned, I think the outcomes are potentially disastrous. And as we sit here today, you have a U.S. debt of approaching $28.5 trillion. And when we put this stimulus or relief bill through, it's going to be north of $30 trillion. So you're talking about GDP of maybe $21 trillion, best case $22 trillion. So debt to GDP levels that we've never seen before in this country, all suggestive that the gold market should be not only flourishing, but should be, significantly higher than the highs we saw last summer. So I ask you, is there a catalyst? Is there in your opinion, what's the trigger to get this gold trade, which has been languishing, back on its feet?
Well, we did have a trigger that I thought was going to be the trigger, and that was Janet Yellen being appointed as the Treasury Secretary, because, she was at least widely regarded as a gold bug when she was the head of the Federal Reserve. And I, like you, am no fan of the Federal Reserve, been quite outspoken against them. I did a seminar once in Washington where a lady that worked in the White House was there, and she put her arm around me, took me behind the screen, said, "You need to watch what you're saying. People that talk like you disappear." So not a fan of the Federal Reserve either, nor the monetary policy of just continuing to print money. We could spend probably, an entire hour and a half talking about the Federal Reserve. But to answer your question, the trigger that I thought was, okay, Janet Yellen, that's going to be the catalyst. That's going to send gold moving, but it didn't. And so I actually don't know what catalyst there could be. I got a question for you. I'd be curious with your expertise, what you feel. I know it's back and forth. Some people feel like interest rates have a lot to do with gold. Some people feel like interest rates have nothing to do with gold. Well, we had low rates for a while. That really wasn't the catalyst. Then rates got higher. That didn't help gold. Do you have opinion on that, on whether interest rates have any effect on gold at all?
I think that's a great question. I don't think they should necessarily. I think it's a completely different animal, but it's clear that they have had an effect. I think it's no coincidence that, 10-year yields, which were 53 basis points at their trough in August, now either side of 1.5%-ish. And this past Friday, we saw them spike up. I think I saw 1.56% before they sort of whacked them down to 1.41% month-end close. I think the naysayers will say, hey, you know what? Interest rates going higher doesn't really work for gold. What I would say, and I'd love to hear your thoughts, interest rates going higher is suggestive of inflation that is all around us, despite what the Fed officials will say, despite what Jerome Powell will say. There's nothing transitory about this, in my opinion. We have inflation in all the wrong places. They could say that there's this want to keep, to have inflation sort of run hot for a period of time, but embedded in that is the fact that they somehow think they can control it over a period of time. And I think that's genie out of the bottle. I mean, we're seeing ISM prices, the ISM manufacturing data. We're seeing the PPI numbers come out extraordinarily hot. And for them to think that somehow this is transitory, can be contained, in my opinion, is just folly. So I do think at a certain point, the gold market wakes up to that. But to answer your question, I do think the rise in rates has been really negative for gold.
Yeah, it seems to have worked out that way, and I'm glad you brought up the PPI because I'm on the same opinion there. The Federal Reserve is saying we're not worried about. The only thing they say they're worried about is unemployment, right? They want to get employment back, and they just keep jawboning the fact that there's no inflation. But if you go to the grocery store, if you put gas in your car, there's inflation, and the PPI is high. It's going to translate into the CPI as well. And yet they're still continuing this process of pumping money, liquidity every single month or every week, really, with the auctions, et cetera. And it just seems like if there is inflation and excess liquidity, then at some point something has to give with gold. I mean, it can't just be bearish or negative on all fronts, can it? But it seems like it's been that way lately. So that's the thing that I can't understand it. I mean, I've tried to talk about it and explain it, and I always felt like I had a decent understanding of gold, but it hasn't seemed to any of the historical norms with gold just aren't seem to be working right now. So
Yeah, go ahead. No, you go ahead.
Well, I had another question for you because I'm sure you've heard this too. And by the way, on the interest rates, I watched the show where you were talking about, and correct me if I'm wrong, that interest rates rising and where you thought the markets would really have a problem is if it got to 2% on the 10-year. Was that right? I mean, because I watch you every
Yeah, what I thought, and I've thought for what? Well, I mean, I thought since, let's call it the fall, it felt to me as though interest rates were going to start to move in a pretty significant way to the upside. And I thought all along we'd get to 1.5%. And I've thought again that 1.5 would be sort of that point of no return, or that sort of point of diminishing marginal returns, in terms of where the market would say interest rates going higher is a good thing. And then all of a sudden it'd say, wait a second, maybe it's not such a good thing. And I will tell you, if you looked at Friday's price action, which I know you did, that moves through 1.5%, and then the subsequent pullback. I mean, it made sense in terms of prior support in the 1.5 level over the last decade or so. That is resistance, and I think that's what we found ourselves. But I do think we're going to start to ratchet our way through 1.5%. So 2% to me is a level that if we get there over the next couple of months, the stock not going to like it at all. But 1.5% is the trigger to me, Rob. So hopefully that answers your question. But in terms of gold, I don't know if your work with Elliott wave theories, I know you've done a lot of work with, supportive of the price here, or does it suggest, that next leg lower?
Well, at this point in time, it's looking like the next leg lower. I'm glad you brought up Elliott wave, because so many people just view Elliott wave as that 5-wave directional pattern and a 3-wave corrective pattern, but it's so much deeper than that. And there's also corrective patterns, of which one is a triangle. And so now that 160 on the GLD has become support, and obviously is a descending triangle, which, more often than not, people say breaks to the downside. I always try to view as that you need to protect both sides when you have a triangle. But the current pattern is suggesting not necessarily a downward move or an upward move, but it's suggesting that gold is getting ready to do something. And I have no idea which way it's going to go. So we trade the strangles, and basically they're well out of the money. We could get into that with setting the delta and gamma where they have the greatest acceleration. So we don't do one strike out of the money. We go well out of the money where you have the greatest acceleration up the delta curve when it moves. It's a pretty interesting strategy, which I think makes sense right now on gold, because I'm just bearing the bones here that I actually have no idea where gold goes from here.
Yeah, nor do I. I mean, I'd be perfectly, yeah, I say it all the time. I have opinions, obviously, but I suggest that I'm right about anything. There are three certainties in life: death, taxes, and my jump shot inside of 18 feet. After that, all bets are off. But my pushback to you is obviously, the move lower in gold has somewhat coincided with this astronomical move in specifically Bitcoin. And I don't necessarily want to go down the Bitcoin rabbit hole. But Bitcoin going from that 20,000 level, which was the prior high back in December of 2017, obviously exploded to close to 60,000, pulled back to 43,000. Now, last I looked, we're either side of 50. Do you think that's taken away some of the dollars that historically you think they found their way into Bitcoin?
That's a great question, and I actually was going to ask you the exact same question, so I will after I give you my answer since you asked first. Obviously, the interest, I mean, all you hear is about Bitcoin. You guys on CNBC now have it on the ticker, how S&P Bitcoin is on there. It's such a hot topic. And my personal opinion, and you may very well disagree, but my personal opinion is there's a lot of retail interest in it. But when you start talking about gold, you're getting into institutions, you're getting into the Federal Reserve, even though they claim they don't own gold, the Treasury owns gold. But I know the Federal Reserve shorts gold, and I do know an awful lot about the intricacies of the Federal Reserve. But again, maybe we'll come back on and have a whole session on the Federal. I would love that at some point in time. But I just don't think the Federal Reserve, because they talked about, right? They talked about creating their own, kind of cryptocurrency or digital currency, they called it. So I don't think they're playing in the world of Bitcoin. And so I just don't think that, other than retail people that might have been, in the past using gold as a safe haven, et cetera, I just don't think the big institutions and central banks are playing in the Bitcoin world. And what's your opinion? I mean, maybe you disagree with me.
Nor do I. I mean, I agree with you on that. I don't think they're delving into it. I don't know. And I would agree that, if they were to do that, I think that'd actually be extraordinarily bullish for gold. But, it's another conversation. What I would say, though, in terms of gold, physical gold, it's very interesting. And I ask people this question all the time, and indulge me for a minute. And I'm not a tinfoil wearing conspiracy theorist, but I just try to read the tea leaves. But if you owned that 67 GTO and you put it up for sale, and somebody came to you, Rob, and said, I'll buy that car from you for $25,000, but I don't want to take delivery of that car. I want to know that I own it, but I want you to hold on to it for me. And then an hour later, somebody calls up with the same sort of proposal to you. They say, Rob, love the car, give you 25 grand for it, but I don't want to take delivery of it. I want you to hold it. You, in perpetuity, right? You would make that type of deal, because as long as you own that car, although others might take claim to it, it's you physically have the car. I mention that because I think you sort of spoke to something around this. If you don't own the metal, it's effectively not yours. And, if you had gold and you knew that you could sort of sell it in perpetuity because nobody's going to take ownership of it, you would do that. And I think to a certain extent, that's what we're seeing. And oh, by the way, if you don't think that's true in terms of ownership, Venezuela asked for their gold back about a year or so ago, and the Bank of England said, I won't use the vernacular, but they basically said, yeah, too bad type of thing. So I think that owning the physical metal is imperative. Now, I mention that because what we saw, it's probably 8 or 9 months ago, we saw the front month crude contract go to a negative $39 a barrel-ish, because the numbers suggested that it was cheaper to do that, or more cost-effective to do that, than actually take delivery. I think at some point you could see the exact opposite in the gold market, and maybe the silver market, which we could talk about, where people ask for delivery of the metal and there might not be any to give them. Thoughts on that?
Yeah, again, you're asking me, and the question I was going to ask you, as far as the paper claims on gold versus what actually really exists. And you talk about Venezuela, and there's conspiracy theories about the fact that in the past, with what we're doing with the Federal Reserve continuing to authorize the Treasury, I used to say the Federal Reserve, just printing money, and people say, oh, no, the Treasury prints money. Okay, well, if we have to be politically correct, yeah, Federal Reserve authorizes it, the Treasury prints money, but they're continuing all this printing and the liquidity that other countries have actually demanded that we pay our debts in gold. And so, the conspiracy theories are out there that there is no gold. the Federal Reserve says, well, we don't own it, the Treasury does. And so whether we do or not, I'm totally with you on, you have to have possession of it. I'm 100% in agreement there. And I would like to move into the silver point at some time, but I like to know your answer
well,
to the same question.
so we have a question from Matt J. Gold, and this I'm reading, so bear with me. Gold heads might see SLV being a similar store of wealth and also having the advantage of industrial usage. So it has the advantages of GLD and the industrial growth aspect of shifting buyers. I'm just reading. Does silver behave like gold in a downturn / inflation? I'll ask that to you. I'll give a shot at it as well. But thank you for your question, Matt. And by the way, folks, if you do have questions, feel free to type them in the chat. I'll be on the lookout for them, as will Natalie and Steve. So, Rob, we'll talk about silver now. Some of the same attributes of gold. Plus, there is an industrial use aspect of this as well.
Yeah, and that's an excellent question that Matt asked there, as far as is silver going to be the same thing, and then the industrial use of silver. And I've been talking in some YouTube videos, et cetera, about how, in the past, and I know you know this as well, that gold used to be the leader, right? Silver was the little brother or stepbrother, and he followed along. It seems like things have reversed now. The silver is the leader, maybe because of the industrial use, and that may be the thing that keeps it from falling into the same trap as gold. That's my opinion. I also wanted to mention, I don't really want to give a shout out to him and all, but I was long SLV, and then the whole Reddit guys on the silver squeeze, etc. And they were going to try, that was their modus operandi, right? There's too many paper demands for the actual silver, and they were going to create this big silver squeeze, and it opened higher, and I actually took that opportunity to get out of silver. So that was a great morning for me, but then it sold back off, and we found out that those guys don't have as much power as they think they do. But the interesting part of the whole thing, though, was their theory was, there's more paper demands on silver, just like there's likely more paper demands on gold as well. But my opinion, and then I'll give it to you for yours, is that silver will likely stay a little stronger than gold due to the fact that it's in a lot of electronics, etc. And anyway, more than just we like wearing it on our our hands and necks. And
without question. And look, I mean, we're seeing, we're talking about copper at almost historic levels. I mean, steel prices are through the roof. There's nickel demand. I mean, all across the base metals compound. Aluminum cans, having trouble sourcing aluminum to make. So you wonder at a certain point. I mean, demand is manifesting itself in those metals for obvious reasons. I mean, there is demand. Stands to reason. You have inflation on the back of that. If you just look at that complex, gold. I've never thought of gold as a commodity, and maybe we can have this conversation. Commodities are things that have an end use, and to a certain extent, silver does have an end use. Yeah. I mean, people will say gold has an end use in the form of jewelry, but you understand what I'm saying. I mean, crude oil has an end use, natural gas, aluminum, nickel, zinc, soybeans, corn, wheat, all those things. There is an end use. So there's an understanding of the supply and demand thing. Gold is sort of its own animal. I guess my question back is, are we just sort of, is this sort of the darkest before the dawn, or am I just looking at this the wrong way? And I want to I try to keep my dogma out of it, but it's very hard at times to do that. But I'm trying not to be dogmatic and just look at it and say, you know what, in a world where the demand is there, inflation was all around us, and oh, by the way, every central bank around the planet is doing their best to debase their currency. How can gold not win in that environment?
It is hard to imagine, and going back to the beginning of our conversation, it's hard to imagine that gold is where it is now. Is it the darkest before the dawn? I'd like to think so, but again, I really don't know. And I do agree with your analogy 100%, or your conversation with silver having a real use, and gold's it's kind of a luxury item, right? I mean, we like it for jewelry and gifts and stuff like that, but silver is actually being used in electronics and things, so it does have a real use. And so I do feel like silver is the leader and likely can move higher, but the primary conversation being gold. Man, if it breaks down from here, that it's gonna, the market shocks me all the time, but this would be something that would really be mind-boggling. I really think it tries to hold here, but I don't know.
Yeah,
The darkest before the dawn. I have to go back. I just don't know.
nor do I. And it's coincided. Listen, this move lower in gold has coincided with the dollar. For those of you that follow the DXY, I mean that 90 level in the DXY has been support. I mean, I know the 88 level, but it's held fast. I'm one of these people that believe that the dollar's headed precipitously lower over the next few months. And Citibank put out a note towards the end of 2020. I want to say it was in October, November, where they saw a potential decline in the U.S. dollar this year, and I agree with that. What's going on in terms of all the just in terms of the stimulus package or relief package, whatever you want to call it. And again, I mentioned that the U.S. debt is now 28 trillion on its way to 30 over GDP that's just stagnant, if maybe sort of grind higher. So you have a numerator that continues to go up. You have a denominator that's stubbornly low, and by definition, I would think that's going to lead to something in the form of a dollar going lower. But the dollar hangs in there. Maybe it's just sort of a best house in a bad neighborhood type of thing. But what are your views on the dollar? Because to a certain extent, if you have a gold view, you also have to have a U.S. dollar view.
100% agree. And actually, that was one of the subjects that I wanted to get into as well. So you led right into it. And, that's another thing, right? We talk about interest rates, the other factors of gold, the dollar is a big one. So if the dollar going down is normally considered to be bullish for gold, it hasn't worked out that way this time either. The dollar went down in November and December, went straight down. Gold actually went down in November. It rebounded in December, but by the time we finished November and December, gold was exactly where it was when it started, but the dollar was much lower. And I agree with you. The dollar is trying to find support here. And, your question of is this the darkest before the dawn? Well, if the dollar does make a rebound, does that push gold through that support and then it gets even uglier for gold? It's just that's why this whole subject matter I think was interesting, is because nothing makes sense when it's coming to gold right now. I just don't get it. I mean, I know the central banks short gold, so I know that, but why are they? I mean, are they really pushing it down at this point? I actually wanted to ask you a question. This is going back to a subject before, but when interest rates were going up, obviously, 1.5, that was your line in the sand. And then I think you said that 2% would be really nasty for the stock market, and you reiterated that here. But do you think that, was there any central bank intervention when interest rates were skyrocketing? I mean, 1.5 is, that's the line in the sand, so to speak. But wasn't it the trajectory of interest rates that was freaking the market out a little bit?
Yeah, well, that's what scared me. I mean, a great point. It's not so much the absolute yield. I mean, 1.5%, I think you would agree, most people would, that you're still talking about historically really low interest rates. And that's, I can't push back on that. That's just truth. It's the speed with which we got there. I mean, we went from 53 basis points in August to 1.5% now. So you can do the math. I mean, we've tripled a year, much less than a year. And that, to me, is problematic. It's the volatility in the bond market about something that is just vis-a-vis. It's probably the most liquid security in the history of mankind. Yet here we are, something that's tripled. If we had seen the similar volatility in the equity market, we'd be talking about it every day. Do I think central banks have intervened in some way? I have no way of knowing. What I will tell you is the market believes that somehow our Federal Reserve can control the bond market. They can control the front end of the curve. They can't control anything else. And to think that they can, or if they believe that they can, is just folly. And I encourage people, to the extent that you watch miniseries, you should watch, I think it was a 6-part miniseries on HBO a year or two or so ago. And I bring that up because the last episode takes place in the control room after midnight of Chernobyl. They were going to run a test, they being the engineers in the room. And in order to do the test, they had to basically shut down, which they did. And then they tried to bring the reactor back up, and it wouldn't do it. The reactor would not come back online. So one by one, this one gentleman in particular started to take out, or ask for the control rods to be taken out in order to get a reaction. And they did that until all the control rods were taken out. Then, of course, they got a reaction that they couldn't control. And when they tried to put the control rods back in, it was too late. And I bring that analogy because I think that's what's happened here. I think our central bank, our Federal Reserve, has taken all the control rods out in hope of getting a reaction, the reaction in this case being inflation. but be careful what you wish for, because once you get it, you're not going to be able to control it. And they can try to put the control rods in the form of, adjusting their rates, but it's going to be too late. I mean, is that a ridiculous analogy? Does that make sense, Rob?
Oh, no, it makes total sense because, and I actually like that, and I'll probably borrow that if you don't mind.
Take it. Go ahead.
Because I think it's really good. But here's my concern is that I do think the Federal Reserve feels that they can control the long end. And I just wonder I'm totally agree with you as far as they want to create inflation. They want interest rates to go up to a point, and, a little bit of a creep higher would be great because it's signaling that the economy is getting better, but yet rates aren't getting out of control. And so, everything can work well in that scenario. But the fact that it went vertical scared everybody. And I was just wondering if they came in and tried to calm that 10-year down a little bit. But I'm of the concern that they think they can control the long end, but I agree with you, they can't. And that's my biggest concern with interest rates. And I think that's why we, as equity traders or derivative traders, need to really be on our toes as far as where things can go from here. But can I ask you, I know you have limited time here before you have to leave for your show, but your thoughts on the dollar? I mean, I mentioned, the dollar went down and gold basically was flat between the November, December. What is your thought on the dollar? Because that's a relationship that a lot of people equate with gold.
Yeah, I think that's a great question. I think you're going to see, listen, if the stock market's on the precipice of something, and again, I have no idea, but obviously it's a little sloppy close today. The last week has been interesting. You've seen the VIX sort of creep higher. If there's going to be some sort of event in the equity market, you're going to see a flight to quality in the form of people going into the U.S. dollar. We saw it, and I'm not suggesting this is last March by any stretch, but you saw it obviously last March when the equity market melted down. The flight to quality was in the form of bonds and the U.S. dollar. That proved to be the wrong thing to do, by the way, in the flight to quality. And I think might be sort of seeing that now. People flight to quality in the form of the U.S. dollar. That's going to be short-lived, in my opinion. If everything sort of manifests, I think it will. Any rally in the dollar is going to be short-lived. I think the dollar is going to continue that trajectory lower. I think interest rates are going to go higher still, and you're going to have this witch's brew of a lower dollar, higher interest rates, and nobody's going to like that, in my opinion. But that's just me, sort of back of the envelope stuff. So again, if you're looking for level from myself, it comes 1.5% in the 10 years. My line in the sand. We'll see what happens. That 88 level in the DXY is the line in the sand on the downside. We'll see what happens if and when we get there. And what does that mean for the equity market? And subsequently, are we going to see a move in the gold market? I think you're going to see that move in the gold market. But as we like to say, gold has been a widow maker for decades. And why shouldn't it do it again this time? But I do, and I hate to use the term, it's different this time. Well, there are a lot of weird things going on in the world, Rob, so maybe it is different this time. What's not different, unfortunately, is the fact that I got to go put makeup on to be on our show at 5, but I'm going to leave it in your very capable hands. I want to thank everybody for allowing me to do this. Thank you, Rob, for your time. Thank all of our people that joined. Natalie and Steve, thank you. I'm going to have to hop, but I'm going to let you guys know if that's okay.
Absolutely.
Thanks, Guy. Appreciate your time.